Okay, precious metals update here, September 27th, Tuesday night. So we have a full 2 days of trading so far, and we have our sort of early week pattern, if you will. And we also importantly have just 3 days left in the month. So that's setting up some important signals. And so let's talk about gold here first, as always. And I have added some new things to the chart just for context. As always, take a look at the links in the description. I have my Twitter there, and also previous metals video and Cycles 101. That's really important to know to understand those concepts. DCH, ICH, DCL. I'll assume you understand what all those things are. So let's jump into the gold chart. This is a very clear downtrend on the daily chart. We've been talking about this. This should not be a surprise. We have this low, lower, high, lower low, lower high, lower low, lower high, lower low. Anyone want to guess what comes next? I'm guessing it's another lower high and then another, right? Now, how high that lower high gets is going to be is really your question. This is potentially day 18 of your daily cycle. There's a lot of talk about the idea that, okay, we're going to get an extension to the daily cycle. So this day 30 wasn't a daily cycle low. In my mind, that's the same conversation as the broader market. And you'll see a link in the description for that update. The broader market looks like it could have possibly made an undercut sort of DCL, but we're fast approaching the point where that it's over, right? Like we're not going to be able to do that anymore because this is pretty clearly a new daily cycle. And in a lot of ways, it doesn't even matter because you can have a daily cycle, you can have a cycle low print, and then you could just have a really bearish cycle that tops out really early. So it's about really the price action, and are we making higher highs and higher lows, or lower lows and lower highs, or are we consolidating on some time frame? And on the weekly, this is week 10, and my God, look at how this thing is drooping over. I have added the 200-week moving average here. That is in yellow, this line here. And just for context, you can see we never got anywhere close to the 200-week moving average for COVID, like not nowhere close to it, right? But we did spend like large swaths of 2013, like basically all of 2013, all of 2014, and most of 2015 under it, and we just kind of oscillated above and below it for a lot of 2016, 2017, 2018, and then we kind of rocketed up, had our 8-year cycle high here, and we'll talk about that on the monthly chart. We've had this move, call it consolidation, right? Just above it. It's basically given the average time to catch up. And now we are solidly below it, right? So we actually closed below it on the week of September 12th. And we're now just getting additional downside below it. And that's really helpful because any bounce that we get, we start to see a world where that's going to become potential resistance. And again, and it's not because these moving averages are magical by any means. It's just to say we're so far below a very important long-term moving average. You could absolutely see people trading off of that as a level, right? And just in general, that's the way markets move. We make lower highs, and so that becomes a zone where you might look for a lower high. So that's really helpful in terms of, us kind of figuring out our options. If one we're inclined to short, or at the very least, if you're holding a bag and the next bounce is enough to get you, let's say, even back to even, that might be your time to kind of unload, let's say. So week 10, so not super late in the weekly cycle. And on the monthly chart, it is month 81 of that 8-year cycle. And I've added this 50-period moving average. And because this is a monthly chart, this is your 50-month moving average. So it's about the same period of time as a 200-week moving average. So about, 4 years. And again, same kind of idea. We spent a good amount of time below it in that 2013, 2014 period. We did move out of that, like, let's say, call it in late 2018, we moved above it. And we've stayed comfortably above it since then. And now we find ourselves at risk of closing below it. And so we've got 3 days left to trade. And again, this isn't some kind of like magical thing like, oh my God, if it closes above it by a hair, we're saved. Not even a little bit. But it gives you a sense of like the reason a moving average, especially that's long term, becomes significant is it's just telling you price has to stay well above its average price over like the last 200 days if it's moving higher. Like it has to do that. That is literally a function of being in an uptrend. So this is definitely a helpful, just additional data point to really, excuse me, quantify just how protracted this downtrend has been since August 2020. I mean, we've been at this for 2 years. It could represent that we're getting close to a low as well. That remains to be seen. This 1440 area, 1450 area looks like a magnet, right? And so that's the other thing. Once we slice below the 50-month moving average, like the way it generally kind of works out, like it's not like it just kind of stops there, right? And so you could see a world where maybe we hit this and we bounce hard, but we remain just kind of like bear flagging here for a little bit. And maybe that doesn't even lead to lower lows, and it just means we don't get a V bottom. But we're getting really, really important signals here. And I'll actually look at the 12-month chart. I'll take off these drawings so it's easier to see. And this is really important. This is something that not enough people look at. So each candle is one full year. And so you can see we had this really bad year in 2013. I mean, my God, we made a massive lower low compared to the previous year of 2012, which itself was just an inside year of 2011 when we had our top. Again, people, this is so important to understand. And this gives you a big advantage looking at the highest time frames that there are, because that's going to be your most important signal. So you can see kind of that period. That was your big 2011 top. You had an inside year. Like imagine people trading gold this in 2012. Like that's like, look at this. I hope you're seeing this, right? Like as I'm zooming in, look at that. Imagine trading gold in 2012 and you're like, I'm doing good. I'm doing like, no, you're not. It's an inside year of 2011. And then you had like the like, just like washes everybody out in 2013. Once we make that low below this candle, it's bad news bears, right? The low on that candle was 1527 and the low in 2013 was 1180. Think about that, right? Once you go below this low, that's your signal to pull the ripcord, right? Like I hope this is making sense. You could save yourself, right? If you got out at the low of 2012, which was 1527, right? So 2013 opened at, what did it open at? 1674, right? And so once we dropped below 1527, so about $100, once we made that low, that was turning this into a swing high and telling you had a potential major top. And obviously you had signals on the lower time frames, like on the monthly chart and the weekly chart and the daily chart. But this is like a red blinking, a blinking red light. Get out, get out, get out, right? So I hope you're seeing this. That doesn't mean we're going to repeat it, but this is about risk management, folks. Once we cross below this low, that's bad news bears. This ends up going to 1180. So again, if you had sold at that 1500 area, you would have saved yourself a lot, right? Now, let's fast forward to this year. What do we have, folks? I hope this is making sense. I'm going to draw a triangle. I'm going to draw a rectangle around it again. Just hopefully that kind of helps, right? We are at risk. We are at risk of a very, very similar pattern. My God, it's so similar that it's uncanny, right? So we have our high on 2020. I keep talking about our 8-year cycle high, August 2020, our blow off. We consolidate for all of 2021, didn't go anywhere, didn't make a new low, certainly did not make a new high, consolidated. at least that 2012 was a green year, right? So if you bought at the open and you just held the whole year, you were good. In this case, what an ugly year 2021 was. But it was an inside year. Again, no new low, no new high. What has happened so far this year? We broke below the low of last year, didn't we? The low of last year was 1676. Once we broke below that, and we're not that far below that level right now, right? But once we broke below that level, that's telling you we have potentially opened the floodgates to a lot more downside. Listen, and it doesn't mean that is what's going to play out, but it means we've opened up the possibility. And if we're talking about risk management, it's something that you have to pay attention to. Now, don't get me wrong, there were other massive bearish signals before. The other thing that I'll call out, I hope you're seeing this as well. This is a bearish outside candle, right? Because this actually started as a green year, and we know that because of this upper wick. We made a high above this candle. So this candle had a high at 1959. That was the war-fueled rally. That was our move where we missed it by $5, right? Missed making a new high, that is. And now we've broken below the low from last year. So we broke above the high, and then we went red, and now we're breaking below the low. The target is the low of this candle. That's why I've been saying 1450 looks like a magnet. That's not a coincidence. That's why it looks like a magnet on the monthly chart and the weekly chart. It's because of this structure on the annual chart. If this didn't make sense to you, play it back. This is probably the most important alpha there is in precious metals. Now, at some point, we're going to get a short-term cycle low, and we're going to get a bounce. We're going to start to build some wick, and that's going to be important to watch. Like, do we get comfortably back above last year's low and then back test it, and then it holds? These are going to be signals, because that's the other side of this. At some point, we're going to get that major low, the same way this was a major low, right? This was your 8-year cycle low, by the way, your previous 8-year cycle low, right? Think about that also. That's low. Now, that's different because this was later in the 8-year cycle. So it doesn't mean we're going to necessarily see 2 more years of red. But notice how once you had this low, that was a good time to go long. Just wait. And for people that say you're going to miss the bus, what on earth are you talking about? We had our low in 2015. So you're telling me you couldn't get in 2016 or 2017 or 2018? I mean, that was a really ugly year, 2018 or 2019 or 2020. That's how long-term cycle lows work. You have time to enter by definition because the advancing phase should last for months and maybe even years, depending on how long the cycle is and if it's bullish or bearish. Incredibly important. And you can do this as well. If you don't have a TradingView account, I definitely would encourage you to get one. Pull up a yearly chart. Start to look at it. Like, this is incredibly important to understand, to apply those same patterns that we look at on those lower time frames. And so that's the gold chart. Let's just look at silver really quickly, because silver has been below last year's low for a much longer time than gold. Gold is really only now doing that. And right, so silver, you can see silver is appreciably below last year's low, which was, that 2140 level. So once we broke below that, the downside really accelerated. And in this case, I'm sorry to say, folks, but you wouldn't be surprised to retest the COVID low. Again, that doesn't mean it has to happen, doesn't mean it will happen. It just means the odds of it happening are increasing every single day. Like, in this case, did we make a higher high? So 30,094. Oh, God, we did. So this is another important pattern to kind of understand. What might be, this is your extreme bearish scenario. What could be setting up here is a bearish outside bar, a bearish outside candle, like a compound bearish outside candle. So basically, this plus this becomes a false breakout of this entire move. Because this makes a higher high, and this might end up making the lower low that completes that pattern. That would be really extreme, but it is definitely something that has a decent percentage chance of happening. So that's something to pay attention to. But again, even without that, we're well below last year's low, and like by definition, the next important pivot is somewhere around here. We'll probably, once we make I would imagine this kind of area here, like these levels in this sort of general zone, you would imagine would offer some kind of bounce first, but we'll have to see. And while we're looking at annual charts, what does GDX look like? Do you want to hazard a guess? Is it above last year's low? Right? Oh my God. Oh, avert your eyes. So this is a big bearish outside candle so far. And at this point, we would need a Herculean effort to avoid retesting the COVID low. It kind of feels like, right? I mean, this thing looks like it's in free fall. That said, again, we're going to get a short-term cycle low at some point, and we'll build some lower wick. Let's zoom into the daily chart. All right, so GDX is on day 17 of its daily cycle, so not that late. So still a lot of potential downside in terms of time. And today, so Tuesday started as an up day, and then we made a new low. Just as I was talking about with silver, that compound outside candle, we're probably setting up for the same thing tomorrow. So we make a new low below 2152 to complete the pattern. I hope you're understanding that. So two candles combine to create a bearish outside candle, or sometimes a bullish outside candle, compared to a previous one. It's just a false breakout or false breakdown, if nothing else. And on the weekly chart, we talked about this as well. These are all the same things. I hope you're understanding the multiple time frame analysis. That pattern on the annual chart is really just this. You see this kind of like no man's land. This is your big candle coming out of the COVID low. So this is your big kind of crash candle. This big crash candle. And then you had this attempted rebound, but then you had this big upper wick. But then you push through. So we are just about entering that zone, right, of these candles. So would not be surprised to see a somewhat rapid move. Now we bounced off of it a little bit, and we might consolidate for a little bit, but this is where you could expect an acceleration once we cross into this kind of no man's land. We'll see if that actually plays out. And on let's go back to silver. Just look at the daily. Make sure we have that count. So for silver on the daily, we've been talking about how at one point it was bull flagging, and it was staying solidly within this range, which is the range of this candle, right? And this is how you bring objectivity, right? To it's all just math. Look at the numbers. We had this huge candle, and so we then consolidated inside the range of this candle for 1, 2, 3, 4, 5, 6, 7, 8, 9-ish days. We tested below once, and then we sprung back up, right? So we went slightly below it. You can see that wick. And then we popped back up. And then we continued to consolidate. We tried to make a move above. Could not. Consolidated some more. Then we had some downside. And it's like, oh, is it going to hold again? Is this going to be a double bottom? No. This is what's even more concerning. This is a lower high, right? Price tried to rally up to this. I hope that's important to understand. That, I'll just draw it out, make sure that we're getting that. This is a lower high, right? So we might expect another lower high at some point, but that's probably not an opportunity to get long. So we are making new lows on day 19. So we're headed for a daily cycle low. I would think we're going to fail below this daily cycle. Gold obviously failed a long time ago. And so silver is just kind of following here. And on the weekly, this is where it gets a little squirrely. So I've been adding the 200 week moving average. And so you can see we are comfortably below that. And if anything, we actually back tested the 200 period moving average from below. And this candle was a big fail. And then this rally got nowhere near the 200 week moving average. This is indicative of much lower prices. Not, again, doesn't mean it's nothing is guaranteed in markets. I just think of it as it means the scenario for much lower prices is very much on the table. And by that I mean like a potential test of the COVID low. If not, like, the 13, we could stay a couple dollars above it and still have it be a pretty violent crash. And on the monthly level, yeah, I mean, that's important to know about, right? And again, I'm not a huge moving average guy, which is why I don't pay a ton of attention to it. But once you get into a downtrend that's this deep, people start looking at these moving averages more closely. And so it's important to at least be aware of where they are. And so we did close August way below the 50-month moving average. And so we now kind of back tested it. Oof. This is your lower high again. This is the same kind of lower high on that daily chart. Same exact pattern on the monthly. And I talked about this in previous videos. You would expect the monthly candle to go red before we close. We opened at 1794. So that's easy. That's where you would expect us to get below 1794 by the end of the week, because that's the end of the trading month. We'll see if we get there. All the same, this could remain green and just basically serve as your lower high. Whether it remains green or red, it still will serve as your lower high. And again, indicative of much lower prices potentially as a scenario. So that's your precious metals update. I will take a look at Dixie just really quickly. I'll try to do a separate video on it, but I mean, look at how bullish this is. I mean, this is just your weekly chart. Now, this is extended, to be clear, but think about the fact that, like, since this low here, which was your 3-year cycle low, you had this ugly cycle that was like, we kind of gave all the gains back. And then after that, like, this was like May 2021, we've just been kind of making a series of higher lows. So consolidated here, higher low, consolidate, higher low, higher low, higher low, higher low, higher low, higher low. So that to me means when we get our ICL pullback, we'll really want it to hold the 110 area, right? Like, just kind of imagine, I'll draw this on auto, right? At some point, right? So like, this is your uptrend. At some point you'll get your low. Like, you wouldn't really want it to do something like that, right? Like 110 would feel comfortable. Like, that would be a pretty big pullback. That'd be like 4%, and then resumes a move higher into your 3-year cycle top before your 3-year cycle low in around January 2024. So the Dixie isn't doing you any favors. If you're trying to get long precious metals, you've got to be patient and use any lower high as an opportunity to lighten up, not to buy, not to fall into a bull trap.